Welcome, everyone. Welcome to the go-to platform where faith-driven entrepreneurs, thought leaders, and experts share their stories, wisdom, and expertise to inspire and impact others. This isn't just another interview series. This is a strategic platform designed to amplify the voices of high-level entrepreneurs, which especially includes kingdom entrepreneurs who are making a real difference in their industries. My goal is simple: to serve you, the expert, by giving you a stage to share your message, expand your reach, and create lasting value for others. Through authentic, in-depth conversations, we uncover the real journeys, challenges, and victories behind today's leading experts. Each interview isn't just content. It's a powerful asset that helps you to establish authority, increase visibility, and connect with the right people. So with that, let's dive into today's episode. Once again, welcome. Welcome, everybody. Welcome to another expert interview with Ken. And today I have special guest Anthony, and he is the founder, creator of I Know a Guy, which is ikag.me. It's a daily newsletter and podcast dedicated to helping entrepreneurs, professionals, and innovators grow their networks through meaningful connections. With a passion for storytelling and collaboration, Anthony introduces his audience to inspiring individuals, actionable insights, and opportunities to build authentic relationships. His mission is simple: to help people grow their circles one introduction at a time. Whether you're an established entrepreneur or just starting your journey, Anthony believes that the right connection can change everything. Yes, and so do I. That is amazing, Anthony. So what I would like to start with today is let's unpack your story. How did you even get here to what you do and all the things you do? And why is it such a passion for you? Let's unpack all of that today.
Yeah, well, first off, thanks for having me, Ken. It's always great talking with you. I was excited to be able to hop on here. You're doing awesome things, and I'm glad
Thank
to
you.
be a part of it.
Awesome.
Um, but yeah, I've been self-employed for 7 years. Out out of high school, I went to college mostly for football and volleyball girls. Was really my main focus. Thought I was going to get into nursing. Went and got my EMT to even see if I liked medicine. Turned out I really liked the EMT side, did not like the hospital side. So I was like, okay, I can't be a nurse. And then I started looking outside of it, saying, man, do I want to go further in the EMT space and become a paramedic? Do I want to look at maybe being a flight nurse? Nobody's cooler than the people flying around the helicopter saving people.
Right.
Uh, Turns out I can't do that job. The max height 6'2", never going to happen. So I was like, okay, well, got to figure something else out. Would have probably stuck with the ambulance again, but the back of those things are kind of short. So I spent a lot of time hunched over sweating, which, I was like, I don't want to do this forever. So I went and I tried a bunch of different stuff. I did a little bit of everything. Eventually ended up in the trades as a painter sandblaster, and I'm here in the Midwest. We
Mm.
get cold, cold winters. And I was a painter sandblaster, and I was working overnights in the middle of the winter, and it was a traumatic event. It was negative 40 degrees.
Wow.
And I was, all bundled up in the coat and the overalls and stuff, and um, had to use the restroom. And the only thing they had was porta potty. And after that experience, I was like, you know what? I'm done doing this. So I started looking into entrepreneurship, saying I never want to have to sit in another negative 40-degree porta potty ever again
Mm.
in my entire life.
Right.
So then I got into the insurance space, did a bunch of different things. Started with a door-to-door company, learned a lot. Then I kind of shifted around because there's a lot in that space, and I'm what you would call now an insurance strategist. So I'm working in the B2C space and the B2B space, and I was meeting a lot of people networking that were never going to be my ideal client, but I'm a firm believer in adding value to everybody that I meet. And this turned into the way that I add value. I was meeting these people anyway. I figure if I can help enough people, add enough value, and they know what I do, the better it is for my business. And worst case scenario, I help a bunch of people and nothing comes from it. So that's kind of how this all came about.
Wow. That's quite like quite a story of you going from like one thing to another, and then finally ending up here. Now, curious, you said the maximum height for the helicopter pilot is what?
6'2" is what it was for the helicopter crew, is what they were saying.
And how tall are you then?
6'6". So I'd have been I'd
Wow.
lost about this much off the top if I would have been in the helicopter. So it would have been a short career.
I was like, what? How tall is he then? So, I mean, I had to ask that question. Tell me a little bit about ikag.me. Tell me a little bit about that and what that's all about and how that got started.
Yeah, so like I said, I was meeting with a lot of people that were going to be clients of mine, and I wanted to be able to add value to everybody. It's the Zig Ziglar, help enough people get what they want, you get what you want. It's karma. It's the golden rule. It's the reap what you sow. It's the go giver. It's the you can't outgive God, can't outgive God. We've talked about this concept since people could talk to each other. So it's a thing. It's a real thing. It's a universal law that if you put good out there, good comes back. So I was like, okay, I'm meeting people that I can't really help on my business side. I can try and make introductions on the personal networking side, but they just a lot of it is kind of awkward when you introduce somebody. Hey, you should meet Ken. He's awesome. And maybe we hadn't talked in a month, and maybe I don't remember all the specifics. But this way, I was meeting with the people. I decided I'm just going to make these meetings all about them, record it, and share it. So if I come across somebody, and the first person comes to mind is, you know what, you should really meet Ken. Instead of saying, just trust me, I could just send them the episode that we did together, and they could watch it and then give me one or two answers. You know what? He's not exactly what I'm looking for. Great. I saved you time. I didn't make an introduction that wasn't going anywhere. Or
Hmm.
two, and way more likely, after meeting you, they go, he's awesome. Please introduce me. And then they go into that meeting knowing who you are, what you do, what you love about what you do, and what they want to talk about. So you don't have a lot of that first meeting awkwardness where they're like, oh, what's your favorite color? It's green. I put clear indications on the screen here that it's green. But it led to deeper connections. And it was something that I was going to do semi-frequent just when I came across somebody that I thought be interesting. But turns out when you ask entrepreneurs to talk about themselves, everybody puts their hands up. So it turned out to be more than I thought it would quicker. Within the first 6 months, did over 200 interviews.
Wow.
We're in 7 month now. I'm just meeting a lot of awesome people, and I'm introducing other awesome people. And the newsletter, it goes out once a day in the morning. It's a 2 minute read where it's under 250 words. Who the person is, what do they do, why you should meet them. So you can scan that and go, is this somebody that I want to know? If the answer is no, great, check back tomorrow. If it's yes, watch the episode, hear in their voice who they are. After that, if you still want to meet them, I share their contact information. It's free. We all spend a lot of time and a lot of money networking. The last thing we need to do is, try and pigeonhole more in. We know we should probably network more, and this is a good supplement to that. It's a
Hmm.
daily introduction with somebody doing something cool.
That's amazing. One of the things that I really love about that is it's just, what's the word I'm looking for? Innocent. Like it's simple, it's innocent. It's just, it's empowering other people, and you're doing something that not a lot of other people are doing in a way that they're not doing it. And that's what I like about it, is that it's unique. Now, today, I know we wanted to talk about the topic of the goose that laid the golden egg, and having that kind of be surrounded by insurance. So let's kind of dive into that a little bit. Um, what is that about?
So as business owners, as entrepreneurs, a lot of times we're inundated by insurance. So I got to insure my vehicle, got to insure my property, got to insure X, Y, Z, whatever in the business. But a lot of us were missing the important part. All that's replaceable, you aren't, right? Especially if you're a very small, maybe solopreneur. It's on you. If something happens to you, the business is no longer there. If you can't work, the business is gone. Your family's in trouble. Maybe you're the sole breadwinner. Maybe you're the only one that can do it. Maybe you're not at the part in your business where you can delegate 100% of the business off to somebody. And if something happens to you, well, then everybody that you employ loses their job. Your family, they lose your family, they lose the business. What are you going to do now for income while you're going through whatever? So the goose that laid the golden egg is the owner, the person in charge, the printing machine in the basement that's printing out money. If there was a machine in your basement printing out money, you're going to insure that machine.
Mm,
So why wouldn't you do the same for yourself? And I have bunch of examples of where that's been able to save people in the past, and where it hasn't, where they lacked it, and those are the heartbreaking ones.
mm. So this is essentially life insurance then.
Yeah, specifically life insurance with living benefits. Because people think
Gotcha.
life insurance and they go, oh, if I die, I leave. No, that's death insurance. When I say life insurance, I
Right,
mean
right.
something that's going to benefit you
Yeah.
and your family while you're alive. I have a story that I like to tell to just kind of highlight that. Helped a gentleman back at the beginning of COVID. Younger guy, mid 40s, late 40s, somewhere in 40s. He truck driver, owned his own truck, was making really good money, 200-ish thousand dollars a year. His wife would stay at home with their son. They were happy. I went in, I helped him out with a nice policy. Um, 4 months after helping him, he had a stroke, right?
Ooh.
Didn't see it coming. Thank God he lived. The downside is now he can't drive anymore. So the business is gone. If he can't drive, what are they going to do? The policy that we got him set up on paid him out $250,000 while he's alive. So he was able to use that money, especially during the beginning of COVID, to keep his house payments up. Make sure that his family didn't end up destitute while he was going through recovery. He's better now. I talk to him quarterly. He's the kind of guy that you can't get on the phone with him for under an hour, so I limit it to quarterly conversations with him. But he's back to driving now. But without that, they'd have been in trouble. They'd have had to figure something else out because they went from 200,000 a year to zero at the worst possible time. But it was able to, save him, save his family, and now they're able to recover.
That's an amazing story. Yeah, that oftentimes when I hear about, life insurance and different things like that, it's almost like the subject that nobody wants to talk about. It's like it's like the most avoidable subjects, like no, 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 and different things like that. So with that, what are some of the most common myths or lies that people believe about insurance and life insurance? And particularly maybe in your field, like what are some of the biggest lies that and misconceptions that people believe about that?
Well, the first one's the big one. That people think life insurance is only there if you die, right? There's a
Right.
lot of life insurance there that you're going to use regardless. There's plans that if they're structured right, you're going to use them 100% of the time. You're either going to use them as a death benefit, right? You're going to use them to offset an illness, a critical, chronic, or terminal illness.
Mhm.
You're going to use them to borrow money from, right? You're going to be able to use the cash value built up inside of those programs, or you're going to be able to use them for tax-free retirement, right? There's all sorts of things that people don't understand about insurance because they think insurance, they think, okay, I buy it. If I die, it leaves money.
Hmm.
There's way, way bigger field than that. There's a menu of options out there. And that leads into the second myth is that I should only buy X, Y, or Z insurance. People are very adamant in their camps of you should buy term investor S, you should only buy whole life. You should look at there's a menu of options. There's a reason that they all exist. It's not because oh, one's better than the others because it's situational. It really depends on the person, their needs, their wants. Because if you're the kind of person that wants to buy term and investor S, like you're a Dave Ramsey fan, those exist. They can have really good policies out there that you're able to do that with that add those living benefits, that add the things into it, that if something happens, you're still not in trouble. Then you have the other people that go, no, I want to put money into a different asset class that I'm going to be able to grow and retire on, right? That's another option for people as well that they don't realize. And then you have a few in that area. So the idea is when people hear life insurance, the biggest misconception is they put it into a little box when it's huge. There's so much to it. There's more than any one person can really specialize in. That's why a lot of what I do is I work with other people in other industries that are exceptional at the parts of it that they do. And that's part of, I know a guy, right? Is I can't be everything for everybody, but I can be really good in my niche and partner with the people that do the rest because it is so big.
Right. Now, here's a question that came up to me as you were talking there. What do you do with the people that are possibly interested in life insurance and looking into that, but they don't have a lot of capital to be able to invest on a monthly basis? Because I mean, I know even for me, like that would be my circumstance. So, right now I don't have a lot of capital to invest in something like that. So what does that even look like?
So yeah, the obviously the more money that you put into something, the more options that you have. That's universal, right?
Right.
If you go into a car lot and you go, I have $1 million I can spend on, you can buy anything on the lot. But you go on there and you go, I have 30 grand, right? Here's the options. It's the same with life insurance. Obviously, a lot of the fancier ones with all the bells and whistles, higher price point, but when you're looking at like the cost of insurance for, like I said, for that gentleman that I helped with his policy,
Hmm.
that saved us, that wasn't anything special. That was just a nice, affordable policy that was there when he needed it, right? Because it's all sorts of size, and it can be varied depending on age. It can be dependent on, level of income. It can be dependent on, health. All that stuff plays into a factor, what options are going to, be available to you. But there's always something that somebody can have. And the word that they use in insurance is aleatory. It means unbalanced.
Mm.
It has to mean unbalanced in the consumer's favor, though. So depending on what your situation is, there's products out there that are going to be good for you than not better for you than not having them. So like I said, for him, we didn't get him something super fancy. It was there when he needed it, though.
Okay, so for people who say I can't afford it, how would you reframe that mindset?
The problem with I can't afford it is, there's probably some truth to it. It would be hard to afford it. But the alternative is if something happened and you needed it, you really couldn't afford not to have it. Like
Right,
for him, if money was tight and he was like, you know what, I honestly I can't afford this payment every month. And then he had a stroke. He definitely can't afford to live in that house anymore. And it sounds harsh, but it's true. It's
yeah,
the people that need it the most are the ones that are that don't have another option, right? Because there's not a lot of situations where you can pay a couple $100 into something, have a stroke a couple months later, and then have a quarter million back out of it tax free, right? So the people that can't afford it are honestly the ones that need it the most, and they should probably try and figure something out. I can't tell them what's important to them and their family. If it's not, it's not. I just try and help them find room in their budget, because if somebody, let's say they're a smoker, right, that immediately increases the cost. It's like, okay, how important is smoking to you? If we can get you to quit,
right,
right, you're going to save $50 a month on top of that, and your rates are going to go down, right? Is that something you want to have a conversation about, really? Because again, we're talking about serious things. I'm not talking about this, well, it'd be nice to have a higher trim level on the truck. It's like, no, do you want this to protect your family if you're not here to do it, or protect your business if you're not?
right, right. It makes sense. It makes sense. Now, I know years ago in the past, like a friend of mine, was talking to me about what he was doing with insurance, the investment opportunities, and different things like that. And it all looked great and everything else, but there was one thing that kind of shied me away at that time. I don't even remember. I don't remember if I had, capital for it or not, but like he had convinced me enough to where I was like, okay, and I went into that. And then there's all this medical stuff that had to come into play with it. And I know for me, like I haven't seen a doctor in like 35 years or more, and don't intend to at all, because that's a system that I don't trust at all. That's a whole nother can of worms that another conversation for another time, because if I get into that, like, oh, we'll be here for hours. But I remember that's one of the things that shied me away from that whole thing. And it's the same reason why right now, like with my health insurance that I have, I just have it just because it's required to have it. But um, I would like to go to a different company, but the reason what's standing in my way is that health exam. Like I don't want to go into the medical system or anything like that. So, how would you overcome those kind of challenges?
Yeah, so there's two options when it comes to life insurance. You have medical and non-medical. Your medical, you can probably get a better rate, right? Because they can kick the tire, so to speak, before they, issue a
Right.
contract. Then you have non-medical, where they just do underwriting, and they do an MIB check, which is the Medical Information Bureau. So with non-medical, there's no physical involved. You don't have to have a nurse come out, poke, prods, pee, all that stays in your body. What they're going to do is they're going to take a look at your medical history. Have you had any, heart attacks, strokes, cancers, all that stuff? At a certain age, they do require you to have a primary doctor that you see semi-frequently, just because they want to make sure if you're 70 and you haven't seen a doctor, they're a little more timid, right? Because again, an insurance agency, they just have actuaries that are planning, on, statistically, you are going to last this long. If you had this condition, odds are you won't make it. So a lot of it's just statistics, and a lot of it is, them guessing, right? And then on average, the larger community falls into those averages. But, if you don't want to do a major medical, right? If you don't want to have somebody come out and do that, you can get around that. You can do your simplified issue where, as long as you're able to honestly answer, I've never had a heart attack, I've never had a stroke, I've never had a cancer, I don't take any medications, there's no medical history of me taking the medications because I don't see the doctor, and they
Right.
don't ask specifics, you're good. So that's the way around it.
I know for me, like at the time, I think at the time when I was talking with him and, kind of collaborating with him, I remember, I think that was at the time where I was at my peak weight before I dropped all my weight. And that was also the time where I did have high blood pressure, which did work against me. So I ended up having, let somebody come out to the house and do different things with me, ask me certain questions. They put like a blood pressure thing on my arm and everything else. And it turns out that was the thing that closed the door, because once they discovered that I had high blood pressure, then the policy was null and void. And so that was very interesting. But here is another question that I have for you. And this one's a little interesting. So how do you see insurance as an act of love and biblical responsibility?
Yeah, it is. So my dad passed away when I was 19 years old, right? We had insurance that if he didn't leave it, we'd have been in trouble, right?
Right.
Went to cover the house, cover the farm. I was able to use some for school. My brother, my sister, everybody was able to. He wasn't there, right, to care for us,
Yeah.
but he made sure that even though he wasn't, he still could, right, is the best way to kind of put it. So it's an act of love because you can't take it with you. You're doing it to where even when you're not there, you can help. You can, show them that you care. You can show them that you want to take care of them. And it's impactful. There will be people out there that, whoever their parent, spouse passes away and there's nothing. Now they're grieving, and now they have to make hard decisions while they're grieving, which is just compounded. Whereas with us, obviously we were grieving, obviously it was horrible, but we didn't have to stress out as far as the financial part. We're like, okay,
Right.
this isn't going to break us, right? It's going to suck for a good while, but we're not going to have to, start a GoFundMe. We're not going to have to start asking neighbors and looking for handout. It's covered, right? So making sure that everything's covered, everything's taken care of, so that you're not leaving. And it sounds bad, but it's the appropriate word. You're not leaving a burden on your family by not being there. It's a great act of love, and it's biblical. You're a lot of these insurances started with the church, right?
Mm.
A lot of them, they had funds to go to widows, right? This is kind of where it all came from, because again, you're not doing it for yourself, you're doing it for the people that you care about.
Right. Right. That's interesting. It actually birthed out of the church. Tell me a little bit more about that.
Yeah, so the church, it would have donations, and it would put aside donations so that if somebody died in an accident, it would be there for the widow for that exact purpose, right? The
Right.
husband's gone, the breadwinner's gone, especially then, the husband was very, very important. Now it's like, well, a woman can get a job, yeah, but it was different then. So a lot of it started. I can't remember. I want to say something, but I'm gonna say it wrong, so I'm not. But a lot of it did start with the church as just like a charity almost,
Hmm.
but then that evolved into what it is today, where you can make the conscious effort. You're not relying on a third party, because with the insurance companies, yeah, it's a third party, but it's a contract between you and them. It's you saying that I agree to pay this much, and they say in these events we'll pay this much. So it's just a contract.
Interesting. Interesting. I know my church has that kind of fund. It's called, they call it the Deacons Fund. And this is where they have, I don't remember how much it is, a certain amount set aside for families that are in need, people that are struggling in our church. Maybe they need their rent covered for that month. They have this special fund for that. And I myself, I had, my mom and I had an emergency situation happen a few years ago. And I'm not going to go into all the details and everything else, but our church actually came in and paid for part of that. And that was a major blessing.
Mhm. Yeah, it is, and it keeps happening, right? They have other things that churches do in faith-based organizations that's their whole purpose is, helping people in need. And then that even they started to extend into the health insurance industry, where a lot of them started those health shares that we all heard of. A lot of them
Yeah.
were faith-based, but then they're kind of branching off now as a an attempt to fix a lot of the stuff that's broken within our health system. So a lot of them are now non-denominational or non-religious health shares, spinning off of that concept that started again with the church.
Right, right. Now, what about somebody who they've never done this before, never looked into it? What are some of the first steps that they should take if they never looked into life insurance before?
Yeah, YouTube, right? Start looking up different kinds of insurances so you at least have a basic understanding. Because there's a few types, right? You have your term, right? That just means that it terminates at a period of time, or it only lasts for a period of time. So 30 years, 20 years, 15 years, right? A lot of people will get that because you can get larger amounts for cheaper. When you hear people saying, I have $1 million policy, a lot of the time they're talking about term. And a lot of the time people are getting that during their working years, that if something happened to, the dad or, primary breadwinner, it would cover X amount of years of salary.
Hmm.
Right. So a lot of people are like, yeah, it's 5 times your salary. So if you're making 100,000 a year, you have 500,000 in term. But then you got to think about other things. Okay, do I want, to leave extra money that, my kid can go to college on? Do I want to leave extra money to pay off the house? So it can start adding up that way. But you can get those larger amounts for less with something like a term. Then you have, oh, sorry.
No, no, no. Go ahead. I thought you were done. There was just, and that was just a pause. So continue.
Yeah, I got to breathe at some point. No, then you have whole life policies, which are that they last for your whole life. They tend to be a little bit more expensive. A lot more expensive they can be, but they have guaranteed payouts. You're never going to outlive a whole life. It's going to be there forever, right?
Right.
Some people get that on kids, right? A lot of grandparents, they'll get small whole life policies on kids. A lot of them can grow some cash value. A lot of them can have extra benefits that, the kids are able to use. So that's something that, you can have those smaller amounts. A lot of people, elderly people, they might get smaller ones like 15, 30, 50,000, something like that, to pay for final expenses, which a lot of people do if they don't have anything at that point. Because the idea with a lot of like the Dave Ramsey is you buy term for very cheap when you're young, right? Because insurance is cheaper when you're younger. And then you save money outside of it, and then that'll be used later. But a lot of people fall into the situation where they didn't do that. Now they're 70 and they can't, right? So now we have to
Right.
cover it a different way. And then there's a lot of options, but another one would be like universal life, where it can be a permanent policy. A lot of people use it to leverage ways of retiring tax free. It builds cash value. It leaves a death benefit. All this stuff. It's kind of a little bit complicated, but once you look at it, it starts to make sense. It's different versions of it. There's variable, there's index, things like that. But that's a little bit
Right.
extra.
Now, let's kind of build a case study. So I'm kind of curious. So let's say a person comes across your path. They're interested in looking into the insurance that you have to offer. They only have 50 extra dollars a month to pay into it. They're looking for something that will eventually, and again, this is a case study. They're looking for something that they're eventually going to draw on in the later years, something that's meant as a backup, but they only have a capital of $50 a month. What would you build out for them? What would that even look like? How would you work with that person? What are the options that that person would have? Different things like that.
So a lot of that's going to depend on age and health as well. So if somebody's younger, let's say they're 20, 21, they have $50 a month, that's going to take them a lot further than somebody 60, right? In poor health, right? Because the older you get, the more expensive the cost of insurance is. And then also, if you're trying to put money into something that's going to grow, somebody at 20 is going to have way more time to do it. And let's say the cost of insurance was $30 a month, and that extra $20 that you were paying with the 50 would go into something that would accrue over time. $20 over 30 years goes a lot further than $20 over 5, right? If that makes sense. So it's going to depend on a lot of factors. But, if somebody wanted to, let's say, like I said, with the grandkids policies, if somebody had $50 they want to put on a grandkid, that's going to go really far because now they got 60 years that it can do stuff. And then you have other people that, maybe they're in their early 30s and they have, $50. It might make sense to just get them a nice cheap term during their working years with it and then tell them to use the other money that they were going to put into something, into, the whatever market, and deal with a financial advisor or something with it. Or they could look at, maybe a whole life that would grow. So it's really going to be dependent on a lot of different factors,
Hmm.
risk tolerances, all the stuff. It's kind of hard to say universal. But there's not a lot that $50, just to be blunt, is going to grow into in most cases, because a lot of the cost of insurance is going to be picking that up.
Right, right. I mean, I was just curious. It was just a random thing that I threw out there. What would it look like for like a person that's like 50 years old?
50 years old, you're going to be looking at, either, like I said, a term, if you want a larger amount, that's not going to grow and it'll just be there for 20 years, let's say. But if you wanted to put in something like a whole life, it's going to be dependent on carrier and health. You could probably get enough for final expenses that, might grow some cash value that you could use throughout the years. But it's not going to be a lot over that period of time from 50 to, so on. For those, it typically costs a little bit more.
Okay, so going back to the case study of $50 a month, what if they start with $50 a month and then later they're able to invest more into that, leaving the 50 as like the lowest principal, but then there's certain months where they have more availability to throw into that. Is that also an option, or are they just stuck in that window of 50?
No, you can have products out there that you can overfund. That you can definitely do that. You have to be a little bit careful with overfunding. You can't overfund too much, or it can become a MEC, modified endowment contract, that can come with tax implications. But as
Interesting.
long as you're cognizant of how much you're overfunding, absolutely, that's how a lot of people do use it to save. Is they get the cost of insurance as low as they can, right? So, okay, I have the healthiest, youngest person that I'm going to have on that plan. So the cost of insurance is maybe $50. And then every other month you go, I have another 300 that I can drop in it, right? And then they do that periodically, and over time they can overfund it because now the cost of insurance is taken care of. Every extra goes into, let's say it's an IUL, an index universal life. It goes into that index fund, and it can grow as time goes on. So it opens up a lot of opportunity for people that want to overfund. That's where those are best served. You don't want to pay something into like an IUL, for example, paying minimums. Those are specifically designed to be overfund. I've ran into a lot of agents that will misrepresent how those work, where they're like, oh, it's only $50 a month and it can last you forever. What they don't tell you is it's not going to last you forever. It's going to lapse after 10 years because you're not overfunding it, because with an IUL, the cost of insurance goes up as you age. So the idea is you overfund it when you're younger. That way it covers the cost later and it's grown later. So there's money there that you can borrow from as well.
Fascinating. So I want to talk more about how the overfund can work against you, because you mentioned that in the early part of that conversation that that could be something that's not a good thing. So talk a little bit about that, because you've actually piqued my curiosity on how that happens, because that's very interesting.
So one thing to understand about insurance is it's tax free, right? When
Okay.
you pass away and you leave a death benefit, you're not paying taxes on that death benefit. Back in the early 1900s, it was being misused, right? Very wealthy people would pour a lot of money into insurances, knowing that when they died, they'd leave that money tax free, right? There's
Right.
it just goes as a death benefit, and they borrow from along the way. You can still do that. There's a reason that these are called rich person Roths, leveraging code 7702. But again, that would take looking at. But if you overfund it, they put rules in place that if you overfund it too much and you don't have enough insurance to cover the amount of overfund, it can become a modified endowment contract, meaning that that money that you were trying to save, that you'd be able to withdraw from later tax free, now has tax. You have to pay taxes on it, essentially. So the balancing act a lot of people pay when it comes to overfunding these programs is funding it as much as they can for the amount of insurance that they have so that they never have to pay that tax.
It's just fascinating to me. And it just, in a sense, that's kind of frustrating because, yeah, forgive the silence here, but it's just,
So
there's a part of me that just wants to go, how inconvenient. And yeah, there, it just, what is the word I'm looking for? I am literally stopped on the word that I'm looking for. It just, it sounds disempowering. And that's not even the right word I want to use. But if you know anything about me, you know why that disturbs me and why that kind of frustrates me. It sounds like it's not right that that happens. There we go. Now I'm finding the words that I want with that.
there's a book, yeah, it's called What Would the Rockefellers Do, where it talks about this concept.
Thank you. That's now you're getting into like where I wanted to take that. So
Yeah,
go for
no,
it.
I know. So essentially, the wealth isn't supposed to last more than 3 generations. I think it's the Vanderbilts where it lasted 3 generations, but you look at the Rockefellers, they're still very, very wealthy.
Mike, what
Um, in how they do it.
before you finish that, why isn't it supposed to last? Is that some kind of rule out there, or is that a rule that they made up?
Well, think about it this way. You're the person that made the fortune, right? You have a kid. The kid is less competent at doing it than you, right? And then their kid is less competent and then eventually gets burned. It's just kind of an average that it's it lasts 3 generations because you raised the millions and you handed it off to somebody that handed it off to somebody and it's just not as good. Look at Star Wars. Anyway, if we if we look at like the book What the Rockefellers Do, what they did to get around it is it all goes into a trust, right? All the money goes into a trust. When one's born, they put a policy like this on that child that's going to grow cash value
Mhm.
with a large death benefit. That child throughout their life can then borrow tax free from that policy to go to school, start a business, whatever it is. And when they die, whatever debt they have is forgiven tax free out of the death benefit, and that death benefit's then paid back into the trust for the next generation. So they're never losing money, right? The worst case scenario, they fall on their face and then it's forgiven out of the death benefit. It's constantly growing from generation to generation. I think there's like 200 now that are living off of that concept.
Interesting.
Generational wealth is a real thing.
It's just interesting. And it's just like, I see it's like, okay, the government comes in, they're just like, okay, you're overfunding this too much and blah, 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 blah. We're going to come in and, we're going to do this and do this. And that's the way I'm kind of looking at it because I really feel like if you buy a policy like that and you want to throw in everything you possibly can, maybe you start with the $50 a month. And then later, as your business takes off, you're making a decent amount, and you just want to continue to throw and throw it and throw it in there and throw it in there, and you just want to have that so that later you can draw from that. So I'm not even necessarily talking about like the tax free, but like later you want to draw from that. You want to make some investments out of that. You want to like increase that even more and multiply that. It just sounds like they're coming in going, no, we see this as an opportunity of you raising above us, and we're not going to have that. That's kind of the way I'm looking at it.
Yeah, you can use it that way. I'm not saying you can't. You just have to be cognizant of making sure you play within the parameters that they put on it. Because again, they want their taxes, they want their cut.
Yes.
They're going to tax every dollar 50 different times. But you can play that way. That's like I said, it's called the rich person's Roth for a reason. A lot of people don't know
Yeah.
about it. We're kind of stuck with the bit we know. A lot of this stuff has been a very well kept secret since then, right? Because yeah, like I said, it was being misused back then. I'm saying misused, but it was being misused back then, and now they put rules on it, but it still works for the people that are able to, leverage it. And you don't even have to be that wealthy to be able to leverage it. Like I said, it's
Right.
considered the rich person's Roth because that's who knows about it. And a lot of people pay into it, and it grows and it does awesome. But you do have to be cognizant of, big government coming in and saying, okay, pay up, so.
Lord, I could get on so many different subjects with that. It's like big government. Bleh. Um, so before we start wrapping up, What does it mean to leave a redemptive legacy, and how does this tie into financial and life planning?
So, like I said, generational wealth is a real thing.
Mhm.
One of the best ways to start that is through insurance, right? You're always going to leave more than what you paid into it if you do it right.
Right.
It's always going to be a net positive for the following generation. And if every generation did that moving forward, it doesn't take a lot of those until everybody in that family is very well off. And again, being able to structure it in such a way that it can't be mismanaged. Like I said, the three generations rule, that it's every single time it's getting bigger, right? Because the best way to make money is not to lose money, right? So if you can pass along that money every single generation, it's just going to be a net positive for your legacy. And if you're the one that start that, 4 or 5 generations down the road, they're still going to remember your name because you're the one that got that ball rolling, and they're in a better spot specifically because you decided that, okay, you know what? I'm tired of this generational struggle where I pass on this business, the business fails, and now they have nothing. But no, you're passing along, a guarantee.
That makes sense. That makes a lot of sense. Now, for someone like me, like I don't have anybody, like I'm passing, I have no kids, I have no wife, I'm a single guy, and everything's like that. I live off of a small investment that's with my investor. It's the money that I got from the house that I sold back in 2015. But I definitely know that that's only going to last me for so long. I get a budgeted principal from him each month. It's a little higher than what he wants. And it's only going to last me for a few years. And so right now I'm using that to grow my business. But I mean, I'd be lying if I said that I wasn't, my interest wasn't piqued with stuff like this. It is. It's just that, for example, for my case, um like with the constant raise in like prices of different things and stuff like that, I am slowly but surely hitting that top of my budget. And so somewhere down the line, I would love the opportunity, while I still have that investment money that I'm drawing off of, love the opportunity to like shove some of that over here and have that curate whatever it's going to curate for me through that. So, what would you say to a situation like that?
So you're going to want to talk to somebody that's very good at what they do. I've interviewed a few of them. I'm okay at it. There's better people out there than me. But you know what? I know a guy.
That's humble. That's humble for you to say that.
Yeah, no, it's true. That's why this makes sense, is because I don't have to be the expert in all parts of it. Like I said, there's
Right.
there's there's certain areas where there's people that are very, very good at this part of it. That's where I would start. And then as far as planning it out, it might be something that changes. Like I said, if it's like, well, I don't really have people that I want to leave this to, it's like, okay, do you have a not-for-profit or a church that you'd like to leave the funds to?
Mm,
Do you want to benefit from it, like that truck driver I spoke of, where he didn't die? He was still able to benefit from having it. It paid him way more, his life. So, it all kind of factors in. So, like I said, it's a case by case basis. You'll have people out there that adamantly say, um, you have to do this. This is the only way to do it. You buy term and invest the rest, or you only do whole life.
right.
I, it's wrong, because again, there's a menu of options and everybody's situation is different, and all of them need to be considered fully as to what the person needs, what the person wants, what the person can afford, and what their health can afford as well. So if that's something that you're considering in the future, there's a bunch of people out there that are very, very good at what they do, that could at least advise you on what would be the best. And you know what? I know a guy, so.
I love that. I love that. That's a great cue as we're wrapping up here. So whatever it is you're looking for, you guys, this guy knows a guy. And this guy can connect you with that person. So, definitely you want to reach out to Anthony. And the links to be able to reach out to him are going to be in the description below this video, as well as his bio and everything you need to know about Andrew. So, as we're wrapping up, what are 3 to 5 things that you want to leave our audience with today? Somebody coming across this episode, what are 3 to 5 things, powerful things, whatever those are for you, that you would like to leave the audience with today?
Well, first off, do something to better yourself today, whether it be, in your health, whether it be in your business, whether it be in your family, talking to your kids, talking to your wife, going on a walk, making that extra call that you maybe don't want to make. Do something better. The second thing would be meet somebody new if you can, right? If you're in business and you're networking and you're meeting people new every day, it's going to do wonderful things for your business as time goes on. You don't know who you need to know. You don't know what you don't know. So you should be trying to talk to more people. So, make yourself a little bit better, reach out to somebody else, and pray. That's my advice. There's a lot of power in prayer. If that's not your thing, meditate. I don't know. There's something to be said about taking a moment, and just trying to get yourself right, whether it just be, like I said, with a prayer or just trying to center yourself or whatever it is. It definitely helps. It's not going to help. Well, it could, but it might not help you the very first time, but it will if you make it a habit. So yeah, those would be my 3. Make yourself a little bit better, meet somebody new, and pray or meditate.
Love that. Love that. Community. It's about community. It's about connecting with other people. It's about seeing how we can help each other. And that is literally the grassroots of what we need to be doing right now, especially at this time in history, especially after like all the things that have happened, all the things that we've seen. And I'm talking the overall picture geopolitically, I'm talking about all of it. Like it should start to become very evident to a lot of people that number one, we cannot trust the news media. Number two, we need to start sidestepping these big corporations and start grassrooting things on our own and getting back to the way things used to be. Yeah. So, and that's actually, Andrew, that's part of what you are actually doing with this I know a guy concept. That's exactly what you're doing. I don't know if you ever thought of it quite that way, but you are grassrooting it and you are bypassing the system and putting things back into place where they need to be. If you're understanding what I'm throwing down there.
Yep, I think a lot of people are rebelling off of the way things have been for the last so many years, and things like this, your town square vibe, where you're growing a circle of people that are going to advocate for you when you're not around, that you're going to advocate for when they're not around. It's less of the I'm going to go rent a Lamborghini to pose in front of, and more I'm going to have a conversation with somebody that shares my values, that I know that if I introduce my client to them, they're very well taken care of.
Yeah. As a matter of fact, I was on the phone with my coach today with a few other people on the call. And one of the things she shared, and I was just like, now that's interesting, but it's also encouraging, is one of the things she shared is studies are showing that nowadays people are looking to things like what we're doing here more and following this stuff more, the podcast world and everything else. They're following these kind of people, us, more than they ever have before. And people are indeed stepping away from the mainstream sources, and they're coming back to things like this. Things like this are growing as more valuable to people than ever before. And I think that's a very powerful thing moving forward. So yeah. Any other final thoughts on that?
No, I think you're right. It's switching from the this is what you should believe to, take a look at a bunch of stuff and then tell us what you think, right? Because it's
Right.
letting you think. You get to hear from all the sources what sounds right to you. When you hold it up to the light, what doesn't scare you away. Yeah.
Yeah, exactly. And that's encouraging. It's the way it needs to be. Yeah, because gone are the days where we are just accepting what we're being told. It's time to do the research. It's time to look at the other sources, you guys. It's time. Gone are the days where we listen to these guys, because look at where they've gotten us. So, anyhow, I'm just going to leave that there. So, anyhow, you guys, once again, remember the links to connect with Andrew. And I really, really encourage you, reach out to him, get on his podcast, let him interview you. It's a really fun network to be a part of. So the links to connect with him are going to be in the description below, along with his bio. Lastly, as we are closing up, I have a little bit of announcement. For those of you who are listening or have come across this particular episode, maybe this is your first time. Maybe you don't even know who I am. This is your first time seeing anything that I've done. Well, I am a mastery weight loss coach. My brand is Mastery Weight Loss, not weight loss, mastery weight loss, because that is the difference. It's about mastery. It's about owning the journey. And right now, I am giving away my 3 secrets to help you lose weight, feel energized, and get healthy without starving or dieting. In just 3 powerful sessions with me in my mini educational boot camp, I expose the 3 biggest lies keeping people sick, stuck, and overweight, and I show them how to fuel their body God's way so that they can break free and finally keep the weight off for life, like I've been able to do. I've lost 62.5 pounds. I've kept it off for 7+ years now, all without a diet and having that be sustainable. And so if you'd like to find out more about that, below all Andrew's stuff is going to be some links to connect with me, including the link to join my mini educational bootcamp series. You guys, and it's reasonably priced. You got nothing to lose but those extra pounds, and you got everything to gain in the right way and in a very freeing way as well. So jump aboard that. There's also a few other links in there that you guys can connect with me. Hey, let's get on a strategy call. That's free. You got nothing to lose with that. Let's get on a strategy call. There's a link in there to connect with me that way as well. So with that, you guys, Andrew, do you have any last minute thoughts before we end our episode today?
No, this was awesome. I really appreciate you having me on. It's been a fun conversation. Well, all of our conversations have been fun. So.
Yeah, it's been a very fascinating conversations. You actually gave me some things to think about as well. So great. All right, you guys. Well, you have a great rest of your day or evening, depending on where you are in the world and what time of day you are listening. And I'll catch you guys on the next episode. Talk to you guys later.